A lot happening this week in the market, and I will tell you this, it wasn't all Iran this week. There was a lot of economic reports. We'll get into that and so much more on this week's Housing Market Update. Let's go. Prices were up, inventory's up, and rates are up, but not that much, and we're making a comeback. Rates are coming down. They're sliding down just a little bit as we head into the weekend. Let's take a look at the headlines for the week. We'll talk a little bit here on what moved the market, the rate market, home prices. Hey, home prices continue to rise. That's right. Seventh month in a row. Builders, though, they're feeling pretty lethargic. Inflation rise, no surprise. We knew that was going to happen. We're going to talk a little bit of down payment advice, and then FAQ Friday. We'll talk about how does a global economy impact mortgage rates. Crazy. What's going on halfway across the world impact that mortgage rate you're going to get when you buy a home. We'll talk a little bit about that. And then VA rates up a little bit, down a little bit, but overall pretty steady. All right, big week this week. The Fed met, and no surprise there. The Fed held tight on rates. They did not move anything. But I will tell you this was probably the biggest amount of dissent that we have seen in quite some time. There were 4 people who were largely dissenting. Only one, though, wanted a cut, and that's Miran, that's his name. President Trump's most recent pick to be on the board. But I tell you the big news, the kicker here was Fed Chair Powell announcing that when he steps down as the chairman of the board, he is going to stay on as a Fed governor. That is almost unprecedented. We have not seen that since 1948 when we had the good President Harry Truman in office. That's big news. And a couple other things happened that have to do with Fed Chair Powell. The charges against Fed Chair Powell by the Department of Justice were dropped this week. So that is going to clear the path for prospective Fed Chair Warsh, who's been, on Capitol Hill working on his nomination. That should clear the path for him to get a nomination through, and then get him into the seat by May, June by the latest. And there was some other stuff that came out. Jobless claims this week. Jobless claims are really low. Very surprising. And it is for that reason alone, or not alone, but it is for that reason that the Fed may not be in a hurry to lower the Fed funds rate, because they see some resistance, or they see some weakness in the labor market. And the GDP, we also got a GDP report that came in a little lower, which, quite frankly, if it continues to be low, this was a first look at the first quarter GDP. It came in at 2%. The expectation was a little better at 2.3%. If the second and the third also show that, the economy's not as strong as we think, well, guess what? That is actually a reason for the Fed to possibly cut the Fed funds rate coming on. Spending up, personal spending is up. Personal income was up too. Spending up, though, probably because fuel prices are up. Let's get real. All right, so that was a lot of news. Fed Chair Powell staying on board. I don't know why. Maybe he wants to right the ship. That's been pretty shaky for most of his tour as the Fed chair. We'll see. And let's talk about Iran. You can't talk about the economy. You can't talk about mortgage rates without talking about Iran. And, escalating tensions. We have been in a constant state of tension, have caused oil prices to reach 4-year highs. When oil spikes, inflation rises, and mortgage rates, they feel that pressure. The ongoing blockade and the stalled peace talks are really what's keeping markets on edge. Iran is running out of storage for its oil, and if they have to stop or camp their wells, well, they may lose some capacity, some significant capacity to pump oil when the blockade is up. So the blockade is certainly working. It is bringing Iran to its knees. It's just a matter of when the government is going to really step up and come to the table. The problem also with Iran is who's in charge. Right, this is something that we've always been, wondering who's in charge really, or when things go awry. Guess what? The military. The military is stepping up and really is probably calling the shots in Iran. That certainly is not good for stopping the conflict. Here's the other big piece of news: the United Arab Emirates, the University of the Arab Emirates, the United Arab Emirates have announced that on May 1st, they will no longer be part of OPEC Plus. And what is that impact? Well, they may be thinking about ramping up their production and not really being limited in their production by what OPEC dictates. That is kind of a slap in the face of OPEC, and if one leaves, who's going to leave next? That's the other thing. So could be the death knell or the beginning of the unraveling of OPEC Plus as we know it. We shall see, though. That was a big step by OPEC. You know, the bottom line, we talk about inflation. We talk about jobs. We talk about gross domestic product. But at the end of the day, the thing that's going to move the rates the quickest and the most, it's oil. It's all about the oil. It is in the conflict in Iran, and that is the most unpredictable factor right now that is really making an impact. And quite frankly, if we had not gone to war in Iran, I think mortgage rates would probably be in the mid fives to maybe even low fives on VA. We were heading in that direction, but you know what? Hey, hope is not a course of action. We'll see what happens next. And we got the Case-Shiller Home Price Index. This is the gold standard for home price appreciation across the country, and it came in at 0.3% higher month over month. That is the 7th month in a row of an increase. So just shows that home prices are still going up. Not a lot, but still they're going up. There is a demand for housing. And we're up 0.7% year over year, which is pretty steady and more than where we were last year. Just really shows the positive impact of mortgage rates being lower. We're about a half a point lower right now than we were last year. So this was a very good report. Not a great report, but a very good report. Just shows that home price, people value home ownership. It's not just a dream, man. It is one of the stepping stones to building a financial legacy. Hey, new home construction builders, man, they can't win. They just can't win. Starts were up 10.8% last month. That's huge. And up 10.8% year over year. But you know what? Permits show the future for home builders. Well, guess what? Down 10.8% month over month, down 7.4% year over year. Just can't catch a break. It's expensive. People are struggling. And builders are not going to build more and they don't want inventory sitting. So guess what? They don't get started as much. And people aren't buying homes. They're not putting permits in. And let's look at the completions. Only up 0.1% month over month as we're in the spring and getting into the really, really peak home buying season. Down 12.8% year over year. Man, that is not good. You can't win when you're doing 12.8. How can you have a recovery for new homes and for home build and just success? Sustained success for new home builders when you're down 12.8% year over year in completions. That's not good news. No bueno for the builders. And we also had the PCE, the Personal Consumption Expenditure Report, the Fed's favorite measure of inflation. And guess what? Headline inflation, it's no surprise, but it popped up a lot. Look at that. 0.7% increase in March. Up to 3.5%. Again, not a surprise. And even core was up 0.3%. And the rising gas prices really drove the headline PCE spike. You don't see that much of a spike in the core because core strips out food and energy. But still, not good. We've been looking at this 3%, trying to get and stay under 3%, and now we're at from 3.1 to 3.2%. Not very good. Not very good at all. But you know what? It was not a surprise. March, what happened in March? March was when we went to war with Iran. Fuel prices started to go up. So this didn't really move the markets like it normally would when you see a big spike like that, because guess what? It was expected. Everybody thought we were going to get this, and we did. So at least it wasn't any worse, and really mortgage rates stayed the same. All right, we talk about the myth of having to have 20% down to buy a home. All right, you don't have to have 20% down, but in some cases you have to have a down payment. Some first-time home buyers, I got 1% down payment program. You can do 3% for first-time home buyers, 5, 10, 15, 20. 20% not required, but you still gotta have the money. All right, no money, no honey, right? And here's some tips for saving money for that down payment, no matter what that percentage is. First, set a budget. You gotta have a budget. You gotta know where your money's going month in and month out, because you can't save it if you're spending it right away. You gotta have a forced savings plan. The best way to do it is to put it on auto, baby. You don't even see it. Don't even see it. Put it in just an auto push out to your savings account, high yield savings account, and just start, building it up. All right, month by month, building blocks, month by month. You got to cut unnecessary expenses. If home ownership is important, you might want to cut down the Starbucks runs. I know Starbucks is doing pretty good right now in the stock market, but you know what? If you're trying to buy a home, it's like $20 for 2 drinks now. Man, that's crazy. It ain't even that good. A lot of sugar, it's not healthy, man. Just buy some coffee beans. My mom, she always, back when I went to clean her house out, she was still drinking U-Ban from the can. Oh my God, that stuff was so nasty. Oh man, I can't believe she drank that for all those years. But she was still drinking U-Ban when she passed away. But cut those unnecessary expenses. That don't mean you have to drink U-Ban, but maybe try doing some of that stuff at home. Hey, let's put some extra income to work. I got a ride home, or I got a ride to the airport yesterday from a lady whose part-time job, she's doing Uber, and she's making $25,000-$30,000 a year. You can make $30,000 to $40,000 a year doing Uber, doing other kind of jobs. Maybe it's DoorDash or whatever. If you're trying to buy a home and it's important, take that second job. All right, take that second job to get that money. Put that money aside. Don't spend it. All right. So really, those are 3 things you can do right now to help get you in a better position. I would say the 4th thing: download this app. This is my Key Steps app. It has a money saving tool as well as a credit tool. Those are 2 things you need to be large and in charge of when you're trying to buy a home. Your credit score, that's your financial report card, and your money, your down payment money. So really great tips. Learn them, live them, love them, be a homeowner. And let's talk FAQ Friday. Well, here's the latest question. Do global events affect mortgage rates? You bet your sweet butt they do. It happens all the time. When the European Central Bank raises their Fed funds rate equivalent, guess what? That impacts us. When we had the tsunami, interest rates came down. The tsunami, Fukushima, interest rates came down. Every time North Korea does something crazy, guess what happens? Interest rates come down. We go to war with Iran, interest rates go up. So there's a lot of things that cause interest rates to go up and down. It's not just our economy. We are not isolated. It's a global economy. And here's the thing to remember, folks. You do not control the global events. Well, most of us don't. All right? But staying informed is important. You also should know what's going on in the economy. All right? It's just a matter of just being American. What's going on? But know that you don't control that. And what you do control is what we just talked about. Control your credit. Control your spending. Control the money that you're saving. Control your budget. You do those things, you know what? You're setting yourself up for success. And you know what? At the end of the day, the only person you got to blame for your inability to buy a home, your inability to really establish a financial legacy, it's you. It ain't nobody else. No excuses. That's what they taught me back in the military when I joined. You got 4 answers. Yes, sir. No, sir. I'll find out, sir. And no excuse. You're that 4th one. And I take that right now. All right? No excuse. If I don't do something, I'm not blaming anybody else. It's me. No excuse. All right, so you don't control the global economy. You don't control what's going on outside your own house. You control you. You control your family. Just remember that. And finally, let's take a look at VA rates. You can see we spiked up this week, middle of the week, but rates started to come back down a little bit on Wednesday, a little bit on Thursday. So that's some good news. And the spike really was due to the suggested prolonged naval blockade that President Trump is, hey, we got the assets. And ain't nobody else got the assets. Iran doesn't have the assets to fight this blockade, and it doesn't look like anybody else is stepping in. So as long as this blockade continues, you're going to see a little bit of elevation in the in mortgage rates, but we're still under 6%, and that's good news. So that's where we're at this week. Next week is Jobs Week, people. Yes. And that's going to we'll see what happens there. And next week is Jobs Week. Man, I love the beginning of the month because you get jobs. The end of the month, you get inflation. Beginning of the month, you get jobs. The next week, you get another inflation week. And then sometimes you get a little Fed meeting. Man, so much going on. Again, stay tuned, subscribe, pay attention, stay positive. We'll see you next week.